up, what up? Good morning, good evening, wherever you may be. Another day, another crypto stream. Sorry it's been so long between the last one. I think the last one was like 3 or 4 days ago now. But yeah, not a whole lot to talk about over the weekend. We didn't really go anywhere with Bitcoin or crypto for that matter. What's happening, Shadow? What's up, Danny boy? Good to see you guys showing up. We got 7 people already. Hell yeah. Crypto's been in a bit of a, well, Bitcoin has been in a bit of a rising wedge in the last couple of days here. We seem to have broken down from it though, so get rid of this vertical line here. So we are into our Monday candle, and just gonna clean up the chart a little bit. So the last time I streamed, I believe it was the 13th, Tuesday. No, it would have been after that. It would have been well after that. I think that's right. I captured the CPI release and also the FOMC meeting, which capped out at $18,400, or just under $18,400, and then since then we've been correcting. And you know, we re-entered this rising wedge, fell at the bottom of it, and now we're trying to like establish support again. But it looks like we've been dealt another rising wedge card. What's up, Vivamort? Good to see you in the comments there, man. So where to from here? Well, I'm gonna measure out do a Fibonacci retracement. So we want to figure out this entire move here from bottom to top. So if we get a fib level, draw it up from the bottom here all the way to the top. We'll lock that away. So you can see it's a 0.618 fib bounce that we're currently on, or reaction. So this is a very popular sort of level to target for any kind of like activity off. You can see the initial activity was off the 382 fib level, but it did not hold for long. 3 hours later, or sorry, about 12 hours later, we got another correction down, and we basically broke through this low here, which changed the character of the trend. So we've gone from an uptrend to now a confirmed downtrend on this time frame here. So this is the 4-hour chart. So now the next measure that I'd be looking at to see if it actually does reverse is we want to see a high get beaten by a higher high. That would change this downtrend to an uptrend, but that's, yeah, certainly not looking like it's going to be the case anytime soon. So what highs are we working with? So I've just moved down to the 1-hour chart. We've got this high here, which was a higher high. But then now we've got lower high, lower high, lower high, lower, lower. You know, if you want to call this a high, this was a brief break of structure, I guess you could say, but yeah, you could argue that this was a short-term uptrend, like this part here on a lower time frame. So, you know, like a 15-minute bull run, I guess you could say. A 15-minute uptrend. I mean, obviously the trend goes longer than 15 minutes, but this is just the 15-minute chart that we can detect it on, this uptrend. So, but hey, that that has already changed character back to a downtrend as we've gone. So here's the lowest low, higher low, higher low, equal, equal, or they're higher. Okay, higher, 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 even higher. But then look, break of structure, so it'll change of character there. So we've pulled in a lower low there, the first lower low. So falling out of the rising wedge, we're back on the downtrend overall. So obviously the macro or the higher time frame picture has not changed from being down. And yeah, that's the, I guess, the 4 hour, the 1 hour, and the 15-minute analysis there. Obviously the scalp charts, 15-minute or 5-minute and 1-minute charts, trends change all the time on those charts, those time frames. So if you're looking at the 5-minute chart, we have been, there's been a downtrend here. You can see it straight on the screen there. That's a downtrend. This was back to an uptrend, and then now we're back onto a downtrend again. So yeah, 5-minute, a lot of structure change, a lot of change of direction, and then especially, of course, on the 1-minute, you got all sorts of things happening down on the 1 minute. It's very noisy. So moving back out to say the 15 here, we've got, how many hours are we into the day? About 4.5 hours or thereabouts. And so far, I'm just going to find our opening candle here. Okay, so this is where the day started on this sort of hammer here. This pivot point was the daily start, and since then we went up here and found resistance again and got rejected pretty heavy, fell out of the rising wedge, and now we're trying to see if we can enter back into the wedge again. But it is proving to be quite resistant at this point. You can see this wick has a lot of, this candle has a lot of upside wick, which means there's a lot of sell pressure coming in, at least at that point in time. Now let's see if there's any kind of Fibonacci structure as to why it pulled up at this point. Like, why did it pull up there? Like, is that a retest of a support? Is it a liquidity grab? Right, let me just delete the higher time frame fib level so that we can really focus in on this one. And yeah, there is a lot of wicking through the 0.618, but you got your candle closes and opens on top of it or at it. So, and we seem to be like fighting our way back up. So with that in mind, I can delete that, and then let's just assume that is, at least for now, the bottom. This was the top. That means we can do a fib retracement from top to bottom and see what kind of resistance we've got working against us right now. So right now we're sort of battling with the 382 fib level, and if we can break that, the next test is the 0.5 fib, which is $16,745. Then you've got the golden ratio, the 0.618 at 16,773. But yeah, I mean, you take it a level at a time, basically. We're still fighting the 382 at the moment. But yeah, obviously the trend is down. If you think about it like a river, the current is downstream right now. It's a lot harder to swim against the current than to go with it. So probably better idea at the moment to be looking for short entries when they present themselves. So you want to wait for, if you've got oscillators on like RSI or MACD or money flow, you want to wait for those oscillators to sort of indicate that things are overbought, so that you can enter at a discount on a short, not at a premium. If you were to enter it like at a low point on a short, like That's a premium. You don't want to be doing that. And it's the same on the long side. You know, if you flip the chart around, you want to be getting in on the dips, not on the rips. Basic stuff. So from here, yeah, like obviously the bias is down right now. It's just what the chart is telling everybody. We've got lower lows, lower highs. We've done this. You could argue that this is somewhat of a bear flag. Rising wedge, bear flag, they both have the same result, and that is to continue down because they are bearish continuation patterns. Let me just change this structure up a bit because we've got a bit more information now. Actually, I'll leave that wedge there, but just check this out. If we do the parallel channel tool and just use these two pivots as our parallel, you can draw that up and you can see that that's a flag right there. If I change the color to like orange, you might be able to see it a bit better. But that is our bear flag, seemingly. If you want to exclude the wicks, I mean, that's cool too. You can do that because there is a lot of price action off this level too. I'm going to pull this in tighter and exclude, like, you know, the extreme activity outside of the range. That would be somewhat like your bear flag there. So either way you cut it, either way you want to draw that, the bias is down. Now, obviously, that's not a guarantee of an outcome there. It's just like a higher likelihood than a move up. Now, if we are to get a move up, and you know, Bitcoin does like to do that, where it keeps everyone guessing, right? So if we get something like this is like the so-called Bart Simpson patterns that happen, where you have a move down, a consolidation, but then a move up. So it's like, hang on a minute. Just like here, you know, everyone was expecting like some kind of a rising wedge or bear flag at this point, except no, we did not go down. We cracked on up. So it just depends. Like, you know, I think a lot of the reasoning behind that was the anticipation for the CPI figures coming out. So, you know, there's a bit of optimism in the market there, a bit of sentiment change. At the moment, there's nothing on the horizon that I can really tell, other than the potential for like a Santa rally. You know, these rallies that happen in December leading up to Christmas. But yeah, I guess we'll believe it when we see it. For now, I'm still bearish on this until proven otherwise. If we turn on like a smart money indicator here, smart money concepts, this sort of like outlines the change of patterns and break of structure. So you can see there it's highlighting that there's been a change of character. So there has been an uptrend shift. Just go to a 4-hour chart and see what they're saying here. Just going to move around the charts just to see if we can get some enlightenment as to what's going on. So down on the 15-minute chart, it looks like we have started to re-enter this rising wedge. And the concerning thing is that we have had this change of character. However, for the bulls, like in the bullish case here, is that we had this low, and the only reason we got that change of character was because we were grabbing liquidity below that level. So, you know, whichever bulls set up positions through this area, the smart place to put a stop loss would be below the previous swing low, which is right here. And this activity here is what would have taken out those stop losses, or, you know, liquidation levels, if at all. And, you know, the same thing happened on the top side here, you know. So if you went short through these areas, or like even like later down through here, the stop loss would have gone, or the, you know, a very popular place for a stop loss would have been just above the previous swing high, which was this high here. And lo and behold, what do we get? Liquidity grab, stop hunt, stopping all those short positions out before continuing to the proper direction down. So if you're expecting these liquidity grabs or these stop hunts, maybe let them play out first before you take your position. You know, if you can see them coming, if you think, oh, I don't want to get in this just yet, I want to see the false move, I want to see the manipulation first, and then I'll take my position after I've seen that. I've seen evidence of that. And, you know, a good example of that is when it's just wick, when it's all just wick above the previous high. You know that was some kind of artificial move. It wasn't like the natural market move. And then another hint as to a swing failure pattern like that is volume. If the high that pushes above the previous high is lower in volume, then you know that it doesn't have the commitment behind it from the bulls. Like it's a false move. And look, we see that here. Look at the volume candle here is lower than, say, this push here. So this was an actual committed push, like a natural market move, but this one wasn't. And you can see that reflected in the lower volume. So that is probably one of the better ways, or one way to use the volume indicator, just to sort of measure out whether a move is real or whether it's hot air, whether it's false. And then obviously your evidence after that is just if it's all wick. So we got wicks happening on the top side, wicks happening on the bottom side. A lot of liquidity and stop losses getting hunted down in the shorter time frames. But right now it does look like we're sort of looking to re-enter the rising wedge. Who knows how long that's gonna last. But yeah, I wouldn't be it's probably not the best idea to open up positions in the middle of the range. Like when you can sort of see that there's like somewhat of a structure going on, like a rectangle. And you know, that can be like some kind of ascending rectangle like this. You want to be building or opening your positions on either extreme of that range. You don't want to be doing it in no man's land, out in the middle of the range, because, you know, then there's less bias in either direction when you're in the middle. At least when you're up top, there's a strong bias for rejection and then heading down. And then same on the flip side, when you're at the bottom, there's a stronger likelihood that it's going to find support and then bounce and travel back up. So if you think about it in that sort of way, then you're less likely to be wasting your time with setting up positions halfway through a move. All right. Hopefully that helps. What's up, Type Jack and Serrano? You can continue on my pattern. Anyway, this is going to be like a pretty relaxed stream. It's not going to be too intense. What have we been running for 20 minutes so far? There's 13 of you. I know it's midnight for you guys in the US, in the East. Almost. It's like, what is it? 11:50 p.m. Sunday night. We've got the stock market opening tomorrow morning. So that should be interesting to see what kind of sentiment we're going to draw from that. How has the dollar index been going over the last 4 or 5 hours? It looks like, okay, there's a bit of a pullback. Seems to be some kind of ascending triangle, something like this. Coming off the back of an uptrend though, which is, you know, you could argue that is slightly bullish for the DXY. So if it came up here and retested that resistance and got the break, you would expect Bitcoin to retrace off that. But you know, we might not get the answer, or we might not get this break of structure until the stock market opens. So there could be a little bit more chopping around inside this pattern, just waiting on the stock market, you know, to see what the theme of the day is going to be. I'll see if, let's check if the futures, the S&P futures is open yet. The US 500, is that moving yet? I think it is. Let's just see if this price changes. Yes, it's moving. Okay, 3856.8. Just want to see if that changes. Go down to the minute chart. See if it's moving. 3856.8 is the evidence. 3856.7. So yes, it is moving. The S&P futures is open, so we're getting some kind of sentiment or some kind of idea of what might happen today, or you know, Monday, the Monday ahead. On a Fibonacci read here from the bottom to the top to try and depict where support may be. You know, it has, at least for now, Friday did pull up above the 0.5 fib retracement, so it's found support here. Who knows how long that's going to hold though. This could just be a knife situation. You don't want to catch a falling knife. So you could get a little bump up and then rejection. So yeah, I see this is what seems to happen is you can get stock market opening strong in the first hour or two, but then all of a sudden, bang, it gets torn in the other direction. And yeah, you don't want to be holding that. You don't want to be like sort of trading against that. So yeah, I mean, if we go down to the hourly chart, obviously the trend is down, just like on Bitcoin. Trend is down. Trade with the trend until proven that the trend has changed direction. But yeah, there's no evidence of that yet. Early days. So that's the stock market. Slightly up in the futures market. Almost 0.5%, 0.37%. Right. How is Doge going? Dogecoin. It's cheap. It's just under 8 cents. 7.766 cents. Let's go down to the 15-minute chart and see what's happening. So it fell out of its rising wedge. So Bitcoin is kind of in this at the moment too. It's in somewhat of a rising wedge. Doge has already broken that. Not dramatically, not violently, but it, you know, nonetheless, it has broken. What else is happening? Ethereum. This is the daily chart for Ethereum. So you can see that it's maintaining support above $1,000. You could even say it is holding this trend line here, these higher lows over time. Now on a smaller time frame, obviously we've got this downtrend happening. But overall, like if you're comparing just the whole move like this, we've got a low here and then a higher low structure here. So we are in some kind of a pennant. It's sort of like a descending pennant there though. So it is kind of bearish. You know, the highs are a lot lower on each of these moves down, whereas the lows are sort of, you know, almost equal. It's almost a flat bottom there. So yeah, I'm not bullish yet on Ethereum. it's still looking pretty bearish to me. But yeah, we could have a couple of months of just kind of flat activity. I don't like to say that, but I mean that's the reality. It could really start getting quite flat, leading into the Q1 next year. But I mean, I think obviously the macroeconomic situation with the interest rates in America. Let's have a look at inflation. Let's do that. Let's go to Trueflation. That's that sort of forecasting website. I'll make it dark mode so we don't blind you. So Trueflation's reading in below 6% now, so 5.8%, still trending down. You can see that the forecast or the predictive nature of this Trueflation was quite off target in the early part of the year, except now it is getting closer to be reading it a bit more accurate as to what is coming in on those CPI reports. So it almost nailed it really on the November reading, right? But yeah, we've now got data for not only all of November but December too. So the next CPI, I think it's early to mid January is the next CPI report. Let's just have a quick look at that. So we get another FOMC meeting on the 5th of January. So that's not even that far away, to be honest. Let's keep going down the list here. There we are. So CPI getting reported on, well, for me it's the 12th of January on a Thursday. So it's a little bit before the middle of January, the CPI. And then after that, a couple of days after, or a few days after that, we have PPI. So that's interesting because last month it came in earlier, or this month rather. PPI came in before CPI, but now it's different. Funds rate. Let's see if there's a funds rate in January. I don't think there is. I think the next fund rate. Let's go for a look. Let's find where the next funds rate is. There it is, the 2nd of February. So very early February is the next funds rate to see where the FOMC are deciding to or how they're deciding to treat the interest rate. But hey, I can, judging just by this Trueflation website, we can already get a feel for CPI. The report in January that looks at December, so the prior month, is probably going to pull in somewhere around 6.5, if not a little lower. But yeah, my call's like 6.5, 6.4. But yeah, I can almost guarantee you that CPI figure is going to come in lower than 7.1, which is where it is right now. So let's go year on year. We're currently sitting at 7.1, so we came in lower than expected, lower than forecast. Same with the previous CPI report. But then the two before that, the September and October CPIs actually came in higher than forecast, which wasn't great. The August one came in lower, which is good. But yeah, we want to see them come out lower than forecast to be optimistic or beneficial to the market, to the price action. Mandul, how you doing, man? Much love from Mongolia. That's really cool. We got viewers from all over the globe, all over the place. That's cool, Mongolia. So yeah, I think at least for now with Bitcoin, there shouldn't be too much violence in the price just yet. I think once the stock market opens, only a few more hours to go, I suppose. Let's see. Let's bring up the SPY chart, and then if we open up this little widget here, it'll tell us pre-market opens in 3 hours and 57 minutes, so about 4 hours until pre-market, and that lasts for 5.5 hours. Yeah. So 5.5 hours plus 4 is 9.5 hours. But that'd basically put it at a 9:30 open for the stock market, which I think is pretty standard. Correct me if I'm wrong. If I turn on session breaks here and change this to New York time zone, we'll get our answer. If I go down to the 5-minute chart, we can see that the market opens at 9:30 every day, every weekday 9:30, and it closes at, what's that, 4 o'clock p.m. Yeah, 4 o'clock. Not a bad day. It's almost a 9 to 5. It's a late start and an early finish for working hours. But I'm sure, obviously the stockbrokers do a lot of work before and after the actual opening hours of the market. I don't doubt it. Pre-market and post-market. What do they call it? Is it post-market? Yeah, post-market. There you go. So yeah, I mean, it can be a big day if you're a Wall Street trader. I suppose it depends on how successful you are at trading. If you can make it all happen in the first couple of hours of the day, you can go home early, I'm sure. Make all the money. Anyway, it's pretty much it. There's not much more to say. We're just waiting to see if Bitcoin can gain access back into this rising wedge. I think, the probability is against it, just with how violent the trend has been the last few days here. So yeah, if you are feeling bearish like me, we are getting resistance on the bottom side of this rising wedge here at the moment. But yeah, whatever position you play, if you're trading, stop losses are your best friend. I have come to learn that. Right. Well, probably going to wrap it up here. This was a very strange time for me to stream. I got called into work today, so I had to delay the stream or cancel it entirely. But I think I was due to come on and give you guys an update of where things are at, of where I think things are at and where they're heading. So yeah, at this point I am a little more bearish, just due to the fact that it is downtrending, and obviously that will change if we get evidence of a change of character, so a change of market structure. Higher lows and higher highs would change that outlook. But yeah, anyway, I'm gonna jump off the camera there, and if anyone hasn't joined the Discord, do have a free Discord. I'm sure most of you are aware, but I'll pop a link up there. Our helpful little chat bot we'll pop the link up for the Discord. It's free to join, and it's probably the best way to get any alerts for when this stream goes live. Otherwise, yeah, definitely subscribe to the channel and hit the little bell notification so that you find out as soon as I do go live. Now, the thing I'm worried about with that is with the YouTube notifications, they can come in a little bit delayed. So, you know, joining the Discord's pretty beneficial that way because you're going to get it instant. You're going to get that notification when I beam it out. I've also got a YouTube channel. Just search Crypto Down Under, UNDA for under. But yeah, anyway, smash up the like button, subscribe if you haven't already, and thanks for tuning in, guys. I'll catch you tomorrow. Market. Now, I am working tomorrow as well, so it's going to be a bit of a schedule change, but I'll at least try to jump on and catch everyone up with what I'm seeing, where the market's headed. Anyway, thanks again, and I'll catch you on the next one.